Scanning on a list of symbols has a very interesting application, calculating composite indicators. Composite means that the individual results will be summed up for the list of symbols. The most common type of composite indicator is an index actually. You can create your own custom index for analysis and trading. For example, you can create sector-specific index with your own logic which are not given by NSE. You can create a sugar index from the list of sugar stocks or a cement index from a list of cement stocks. You can create custom software index and a custom utilities index. I will now show you how to create an index of stocks starting with the letter A from the Nifty 50. First, I create a separate watch list of stocks starting with the letter A. Select symbols starting with A to add to the watch list. Right-click on the symbols, select watch list, then select Add Select Symbols. Select the watch list to add the symbols. Now this watch list has all the symbols on which I wanted to create custom A index. Even though the index will be useful for mostly EOD study, I am using the time frame 15 minutes for a better granularity. Let us go through the AFL code for calculating this custom index. The function addToComposite takes 3 arguments. First, the price array on which composite value has to be calculated. It can be either of O, H, L or C. Here I am using C or the closing price to calculate the composite index. The second argument is name of the new symbol which will be created in Amibroker database. I am naming it A index because it is an index calculated from the stocks starting with A. The third argument is the price array of A index in which the composite closing prices of the individual stocks will be populated. X means to fill up all the OHLC arrays in one go. So this function will now add the summation closing prices of all A stocks in the OHLC arrays of the index. Next, I am using this statement to sum up the number of stocks. AddToComposite will add 1 to all stocks on which scan is performed. So basically this statement counts the number of stocks. Now by dividing the sum total of prices by the number of stocks, I will be able to create an index. Clicking the scan button to populate the index, you can see that a new symbol has appeared in the Amibroker's database by the name of A index. Now I have plotted the A index. You can see the performance of A index in comparison to the Nifty index. This is not much useful. You can use the same approach to calculate custom index which is weighted by the turnover of each stock. AddToComposite can be used to calculate a special type of indicator called market breadth. Market breadth means adding the trends and sentiments of individual stocks of the market to find the overall market trend and sentiment. Market breadth indicators can be extremely useful for trading on all time frames. The most popular market breadth indicator is the trend index. The trend index calculates the relationship between the number of advancing and declining stocks with respect to the trading volume. The index is very useful trading in broad market index like the S&P. It is also very useful if you are managing a portfolio of stocks. A high trend value indicates markets are headed downwards. A low trend value indicates that markets are likely to bounce up. This chart shows a relationship between Nasdaq Composite Index and the trend. I do not have data for trend, so I am showing you a historical chart. You can see in chart that whenever trend turned down, it was a good indication for the market to turn up. The average holding period of such strategies is more than 1 month, and they can be very useful tool for retail traders. Such strategies do not require expensive automation and infrastructure. You can automate such strategies by simply sending automated email signals to your broker for buy or sell. We will now practice something live which can be useful to students in this group who do not want to trade intraday. Have a look at the code here. We will now calculate our own custom bear and bull index. The logic is simple. We calculate the number of stocks in which MACD is more than 0. We call it the bull index. Similarly, we calculate the number of stocks in which MACD is less than 0. We call it bear index. At any point of time when most of the stocks have MACD greater than 0, it means that the overall market is bullish. If most of the stocks have MACD level below 0, it means that the market is bearish. The three arguments that I am passing to the function add2composite are: first, the condition whether MACD value is above 0. If MACD is above 0 for a particular stock, the result will be 1. If the MACD is below 0, the result will be 0. So basically, this condition will count the number of stocks with bullish MACD. The second argument is name of the new symbol which will be created in Amibroker database. I am naming it bull index because it shows bullishness in the market. The third argument is the price array of bull index. We will populate it with the number of stocks having positive MACD of the individual stock. X means to fill up all the OHLC arrays in one go. Next, I am using two lines of code to display the bull index and bear index respectively. The foreign function is used to fetch data from any symbol other than the charting symbol. Now click the scan button. You can see that two new symbols have appeared in the Amibroker database by the name of bull index and bear index. We can now plot the bull and bear index on Nifty charts for analysis. Both the index oscillate between 0 and 44, which is the number of stocks I have in watch list. When bull index goes close to 40, it means that most of the stock in Nifty are uptrending. When bull index goes below 10, it means most of the stocks in Nifty are downtrending. On about 27th of December, the bull index shot up suddenly from below 10 to 40. This indicates that most stocks in the Nifty showed a sharp and strong reversal. When this bull index jumps from bottom to top, it indicates the start of a strong up move in the Nifty index. Similarly, the bear index jumped from bottom to top level around 12th of December. When the bear index jumps from bottom to top, it indicates a strong down move in the Nifty index. Similarly, you can use any other indicator conditions other than the MACD to create your own custom bear and bull index.